Hey gang, welcome to another investor presentation review for a SPAC. I might do more of these. They're pretty fun. I can just kind of ramble on forever while I ignore my job because, why not? Why not ramble on forever? Remember, guys, I am not a qualified financial investor. Before you make any investment decisions, you should talk to one because I'm just a guy that rambles online. Today we're looking at NSH, which is a SPAC that's going to reverse merge with Spire, apparently another satellite company. We just did a video on Black Sky a few days ago. I'll link that in the description below. But today we're talking about Spire. Reception relatively lukewarm, as has been the case with SPACs lately. Started at 12 bucks. Hopefully, a lot of people didn't jump in then because a sell-off happened, and this is sort of sitting around the 10.99 space. If I look at SFTW, which is Black Sky, kind of in the same industry, um, going back 5 days, that had a more of a pop, so more excitement around Black Sky. Kind of tanked in the recent days when SPACs suffered, but it's back up 7% today. So even though it's not news day for Black Sky, they're up 7 and almost 8%. NSH is only up 5%, so clearly more of a lukewarm reception here. Let's look at what Spire does. Spire Investor Presentation, March 2021, even though it's final 228 over here. Come on, guys, get your dates straight. I know, it's because they came out today. Remember to read all this stuff. So we've got some dudes presenting. Great. So what is this? What is Spire? That's a high growth service, software as a service company powered by proprietary space-based data and analytics, massive, rapidly growing TAM, recurring revenue model for predictive analytics and data with exceptional service software as a service KPIs. Constellation is fully deployed. They have got an attractive operating profile and a clear path to profitability. They have multiple products across a range of industries supporting net zero and climate change adaptation and an exceptional management team. So seems like similar story to Black Sky. They've got a constellation. They're using software as a service, probably high margin type of deal. Uh, Seems like they are concentrating kind of on what I talked about before, whereas Black Sky is not really looking at this climate change issue that much in their investor presentation. These guys mention it in the first highlight page, so that's interesting. So what's the transaction here? So like I said, NSH, NavSite, and New York Stock Exchange listed SPAC. It's going to close Q2. Going to list under Spire Global. So they have 230 million cash in trust, raising about 245 million in pipe, and they are going public at a pro forma enterprise value of 1.2 billion, which is 4x of 2023 expected revenue. So let's go back to Black Sky Investor Presentation. Black Sky Investor Presentation. Hopefully I can find that easily. I should have more of this stuff ready. Black Sky, where the hell is Investor Relations? Press release. Investor presentation. I kind of see what these guys were valued at. So they were an enterprise value of 1.1 billion with 445 million in cash. So it seems like a slightly better deal here. At least on paper, I haven't seen what kind of revenue projections they have, but I kind of want to go down over here to see what they're doing, and then we'll see what these guys are doing. So they're saying this is 4x of 2023 revenue. So this would be 1.1 divided by 0.223, 4.9x. So kind of similar, I guess, but we'll see exactly what that means. So everybody's rolling stuff over, and they're going to be left with $408 million in cash on their balance sheet after transaction expenses. So this kind of seems similar to Black Sky in terms of valuation and in terms of the amount of cash they have on the balance sheet. So that's good. At least they're sort of in line if I look at it that way. So what is Spire doing? Inspire, lead, create the business of space-based data. 52 billion total addressable market, 39 billion orbital services total addressable market. Huge long-term market opportunity for weather forecasting. Assumes 0.9 to 1.5 trillion of damages caused by climate change could be avoided through perfect weather forecasting, and providers of perfect weather forecasts could expect to capture 20% of the value they provide to customers. That seems quite quite something to end up come up with this total addressable market based on this. It's something. It's something. That's interesting. So let's see. They've got a subscription-based revenue model, software as a service driven business model, vertically integrated products, multi-purpose constellation. They're looking at launch services, so clearly they don't. This is launch. It's not going to have a lot of this stuff. Telecoms, not really related. And then Earth observation. They do have Black Sky in there and a bunch of other companies I don't know. Again, don't use me as a gauge to invest or not. Just enjoy my fun analysis and my great European accent as I speak in English on a mediocre mic that I said I would upgrade, but I still haven't set up my new mic yet, so we'll get to it. So Spire at a glance. 104% year-over-year growth, 90 to 80% margins. They have 141 nanosats launched. So that's pretty impressive. If I remember, Black Sky was at like 5 of these small satellites launched. They've got lead investors, they've got strategic investors, so they're working with Qualcomm, processing a bunch of data already. They've got a bunch of product customers. I think 145% NRR means net retention rate. And then a 1.2 billion ARR, is that revenue? So they're expected to grow at 100% between 2020 and 2025. And they're going to have an average ARR per product customer of 235K. So seems pretty good, right? I like the fact that they're kind of launched at this point. That means they must be getting some revenue already. Kind of like Black Sky, similar model in terms of software analytics. They've got nanosatellites, lemur nanosatellites. I don't know anything about space stuff, so I don't know if these are better or worse than what Black Sky's got going on, but they got more of them out there, and they're covering 100% of the Earth already. So that's pretty cool. Total addressable market, like I said, is huge. Aviation, maritime, weather, orbital services. I think what they're focusing on, and this is what the difference between Black Sky and Spire is going to be, is a different market segment. Whereas Black Sky's presentation was all about, hey, we're working with government agencies, we're Department of Defense, working with a bunch of countries out there. That's what we're really focusing on, and the commercial stuff will come later. It seems like Spire is more, hey, we're going to focus on the commercial side. The other stuff might come later, maybe, right? They're certainly talking about this whole long-term opportunity for weather forecasting, obviously tying that into climate change. Yeah, I think certainly there's going to be an opportunity for that. I don't know how much it's going to be, but hey, these guys are set up, at least they seem to be set up in a way to take advantage of that. So they got Lemur, collect data, clean data. They get third-party data, combine it with that, get some smart data. They got their own algorithms, very smart algorithms. Kind of Black Sky talked about the same thing where, hey, we have this proprietary platform with our own algorithms. We're amazing. So Spire's kind of doing the same thing. The sale, this is a good kind of wrap up of what their sales pitch is, right? As a company, they get these small satellites up there, a lot less cost intensive than legacy large ass satellites. They collect that data once and they could sell it a bunch of times to a bunch of different entities. That's why the margin is there, and that's why the margin was there for Black Sky. Once you get past the initial costs, the initial cost outlay, which they kind of have with 100 plus small sats in space already, it's all money from there, which is kind of cool. So they monetize proprietary products across a broad and growing range of industries: orbital services, aviation, maritime, aviation. So I think they're certainly targeting government and defense, government and civilian, but they're targeting a lot of other stuff, whereas Black Sky was very much in this space, I think, from what I garnered from the industry. And from their presentation rather, and they kind of espouse there, hey, we have this massive pipeline of contracts, and that's more common in the government space than it is in the commercial space. So I haven't seen anything mentioned here about their pipeline. It's potentially there, but I don't see it at this point. So, all right, they got 40,000 contacts, nanosat contacts per month. Their system is solid, and they have software analytics that have different APIs that kind of spit out data based on the businesses that they're working with. So I think this is also similar to Black Sky, right? They have their own internal platform. I don't know if these guys make their own satellites. There we go. Here's an answer. 100% in-house built satellite and assembly. I think Black Sky actually shipped it out to another company that they own 50% of. So different setup there. And then everything else is kind of similar. They've got, hey, we are launching satellites into space. We've got our own software platform that you can use to analyze all of this freaking data that we have out there. 100 per day Earth coverage is pretty. So it seems like they touch each point 100 times maybe, which is clearly a lot better than Black Sky, which has 5 satellites at this point, and I think are on pace to have like 30 maybe by 2023 if I remember right. But again, go back to that video and revisit it. Don't take my word for it. So interesting business model here, right? Pretty early on in its infancies here. You know, who knows where this is going to go, but Spire seems to be doing well in getting set up with 100 plus satellites that are already up there, already gathering data, and they have a system which analyzes that data. And it seems like they have licenses already set up in place where they can have ground and space stations, which may help with the moat of a company like this. Again, they're comparing it to other companies, whether it's in other companies that are dealing in this maritime aviation, weather, orbital services, data analytics space. You know, it seems like these companies do not have their own proprietary constellations. They don't have predictive analytics. They don't have a ground station network. This is important, I think, with these small sats. They're cheaper, but they're also quicker to design. And I think that's one of the things that Black Sky talked about. It's like, hey, we cost a lot less, but we can also launch these things a lot faster than some of these legacy products that other companies may be using. So how can companies use this data? I mentioned some of this in Black Sky when I talked about, hey, I think they can do more with this. And this is sort of what Spire's already doing, you know, tracking vessels, optimizing fuel efficiency, flight tracking for flights, compliance with regulations that may be in place, a lot of weather stuff, you know. Hey, how can I analyze the weather that's coming to maximize crop yields? How can I do something and maintain physical assets like power lines, like they mentioned here, in terms of predicting, not only predicting, but also getting better, faster data on storms that are coming? You know, you kind of look at what happened in Texas. Can you prepare more for that utilizing some of this data? Because in situations like that, a couple hours may mean a lot. You know, I don't think it's going to change the world, but it could save some lives. It could help some companies be more efficient and save money in the long run. And obviously, a lot of that stuff is very important. Um, Over here it says, we believe we are the only player collecting all 3 data sets globally and simultaneously to combine them into its products. And when they mean all 3 data sets, they mean satellite AIS data, satellite ADS-B data, and RO weather data. Okay, I don't know what most of that stuff means. Again, we're talking about satellites here again, legacy satellites versus Spire satellites, more resilient, better and more modern technology, more flexible. Costs are much, much lower, especially if you want, as a company, to have your own dedicated satellite, right? It potentially costs $10 million and 3.5 years to develop that in the legacy space, whereas Spire, you can rent them. It seems like they have a model where they're renting them to other companies, potentially at 30K per month, and it takes less than a year to get it up there, and it's potentially going to last longer. They're talking about space as a service. I think this is an area that I really like. You know, when you go back to some of those companies, the companies that are launching rockets, that is very risky. Obviously, Spire depends on those companies to get these small sats into space. I think they actually use SpaceX for a couple of them, as far as I know. But it's a high capital intensive model. I don't know if it's going to pay off in the long run. Obviously, we want those companies to succeed because we want to do more with space travel. And I think it's amazing that a lot of these companies are going public now, getting a lot more cash to invest in technologies that are going to be the future. But I do like what Spire is proposing here, that this is a less capital intensive model that may help build a moat that's going to mean repetitive software as a service, high margin revenues. And that's really what you want from a company as an investor. Yeah, rockets are awesome. Are they a good investment? I don't know at this point, right? Software as a service, I know that that's a good investment. You know, if you just look at the companies that have succeeded in the NASDAQ in the last couple of years, a lot of it is software as a service or, you know, high margin, repetitive revenue, low upfront cost type of stuff. And this is what they're proposing in space. So I like the business model. It's just, as with all SPACs, it's execution that's going to matter. They mention some recent customer wins. Australian Office of National Intelligence, Jacobs and Orbitaire. Very cool. More wins that are kind of looking at their value proposition and what they can bring to the table. So VesselBot, they wanted improved time charter equivalence and reduced emissions according to IMO rules. So I'm assuming they can do that via the satellite network that they have. ZN, or whatever this company is, manage real-time ship and cargo capacity. So this is certainly where these types of things can be used well. If they have 140 satellites, they can really help you manage where your ships are, how much cargo capacity you have. You can do that much easier if the quality of the information is real time and good than you could if you didn't have that information or you had to wait hours to access that information with traditional modes of accessing that information. Satavia, aeronic, supersonic. Um, so this says what they do. I'm a dumbass. VesselBot improved their voyage optimization systems by including Spire maritime products, achieving a 10 to 15% increase in TCE and 30% reduction in GHG emissions. Delivers comprehensive air traffic data that Satavia utilizes to enable live monitoring and live updates on virus importation risk. Oh, okay, logistics. NASA wanted precise atmospheric and ionospheric data for weather and climate research. Well, this kind of covers Allendorf's. And then Orbital Services receives access to encrypted RF sensing on orbit within 10 months of signing a contract. Interesting, interesting. So this is, they're showing exactly what they can do. They're showing, you know, they're growing their revenue per product customer year over year. They're expecting that to grow next year. They're booking more. They're having more bookings per salesperson. They have all of these customers. You know, they name them blue chip customers, but some of them are certainly. And I noticed this one article here that the National Oceanic and Atmospheric Administrations awarded a contract just this last November to both GeoOptics and Spire Global. It's not worth a lot. I mean, it's a maximum of, I think it said 23 million, a 2-year contract with indefinite delivery. But that could be extended. I don't know how much of this goes to GeoOptics, how much goes to Spire Global, but there's certainly opportunity to make revenue in this space, and they're showing that with their growth rate, and they're showing that with their retention. And the nice thing is that this isn't a massive outlay in initial costs. You know, it certainly costs money to get those satellites into space, but they already have 140 plus, so it's a 7-month payback. You know, in terms of customer acquisition cost, that's pretty decent. They've got 150 product customers in 30 different countries. Pretty good. A lot of variety here, which you like to see. And they're retaining and signing on. So what this tells me at 145% customer net retention rates is that not only are customers renewing their services, but they're adding more services to whatever it is they had the year before, which is awesome to see as an investor. So what are they doing? They're going to invest in sales, marketing, and product development, kind of more additional sales personnel, make sure marketing is out there. They're driving product development, etc. A lot of this stuff, it seems like they've got this hey, we have 4 levels of data here that we're targeting: maritime, aviation, weather, orbital services. A lot of data is going to be available. There's going to be stuff to upsell. And that's kind of what you want from a company like this. Sure, we have one product, but have you heard about this other product? Can we not only renew our customers, but grow their product space with us? And I think it seems like they have been in 2020. Can that continue? Can they expand to different levels of data and analytics, right? They're talking about soil moisture, ionosphere, RF monitoring, a lot of good stuff here. And then, hey, maybe some mergers and acquisition we can do. And certainly they have a lot of money to do that now, 400 plus million. So they've got identification systems, weather plane tracking. They're going to add soil moisture, ionosphere, microwave sounds, data fusion, more stuff that I don't really know about. But this is really where I think Black Sky and them differ. They've got a focus on some of this commercial stuff. Black Sky is more of has this government DoD and intel community footprint out there. So those are the two differences. I think this is potentially more predictable in terms of revenue because you've got long-term contracts. Like Black Sky purposefully pointed out their $1.7 billion pipeline that they had in place. And I think they're not doing that because they don't have it in place, right? They're more focused on the commercial sector, which is going to be, potentially 1-year renewal type deals. Stuff about their management team. All right, financial overview. All right, so again, recurring model, strategy, net retention rate. That's pretty good and growing. Strong growth in the top line. A scalable model with 90% gross margins and high free cash flow conversions by 2025. So kind of like Black Sky with their financials. They were like, hey, we're going to make a lot of money, but eventually, right? So I think they're in the stages of growth here where they're investing money into getting customers. And that's going to cost some money and that's going to affect margins. But it seems like they've got some of these capex intensive things out of the way. And by that I mean, hey, they have 145 satellites already up in space. Black Sky had 5, right? So I don't know if their satellites are better or worse, but that's a lot more satellites, a lot more coverage in their constellation. So they're ahead of the curve, I think, in that regard. Again, these guys are targeting the commercial space, commercial sector more so than the defense government sector. Black Sky is more in that other range. Financials wise, they have 36 million bucks in revenue. It seems like the valuation is very much in line. 1.1 billion for Black Sky, 1.2 billion for these guys. Both are kind of in that 400 million-dollar range in cash on the balance sheets at this point, and that's EV, not market cap. Market cap is going to be probably closer to 1.6 billion at the $10 that this is priced at. So revenue here, it seems like they're very optimistic about growth. They've got 36 million in, so this is recurring revenue. Okay, so this is this actual revenue or recurring revenue? This is a bit confusing the way it's worded. So obviously not all of their revenue is going to be recurring, or is it? I don't know. So they're basically growing at about 100% every year, which seems optimistic. They got 36 million in 2020. They expect 70 in 2021, all the way to 1.1 billion by 2025. And I mean, if that's reality, then this is a smoking ass deal and you should buy it right away. But a lot of these SPAC presentations are overly optimistic, right? This isn't anything that they have to be held to. Obviously, if they fail, the stock will get punished, and they're setting expectations that the stock market will hold them accountable to. But at the end of the day, it's a kind of a sales deck. But it's tough to believe that this is the sort of growth that they're going to have. The interesting thing is they have 145 satellites already in space. They don't talk about how many more they plan to launch in the future. One of the things in the Black Sky presentation that I found appealing was that they're sort of in the starting zone with 5 satellites in space, with plenty more to come by X date. And as they get more satellites up in space and more of these contracts online, then their revenue kind of spikes up. You kind of go over here and you say, hey, we started at 22. Some of this stuff is still 100% growth like it was on the other page, but it sort of slows down, right? This is, it seems reasonable. What's going to drive this and this, right? For me over here, the growth here is we're getting more satellites up in space. So we're getting more revenue because potentially we're supply constrained at this point because we don't have enough satellites up in space. And these guys kind of pointed out exactly where their pipeline's coming from and what is driving their revenue for 21, 22, and 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 the pipeline really helps with that and visualizing this revenue growth. Over here, you're just sort of saying, well, you already have 145 satellites in space. You have this software as a service model. These guys with 5 satellites in space and a similar model are at 22 million in 2020. You're above them, but you're also farther ahead in your production in terms of the satellites in space and potentially the software as a service. What changes between 2020 and 2025 that drives this difference? In Black Sky, it's, hey, we have more satellites in space. We're developing other stuff. Over here, it's like we're hiring more salespeople and we're going to sell more products. Interesting, but I don't know. Hopefully, there's sort of more information here about that. But listen, if this is true, if this turns out to be true, this is a good deal. And I'm not saying it can't be because I do think this is a model that could lend itself to quick growth. As more and more companies start to utilize data that is only available through this type of analysis, right? It's hard to get real-time data without satellites. And if these companies can provide that and do it in a recurring revenue way, then they're going to get a lot of customers once this becomes the norm. But I don't know how long that takes. These companies have been building these satellites for years and years and years, and they haven't really exploded, right? The need for this data is clearly there, but how does this change between 2020 and 2025 in a way that makes this, 30x revenue grower between, in 4 years essentially, because we're already in 2021. It could be a longer play than that. Maybe the uptick isn't as impressive as they take up. If this suddenly becomes a 70, 100, 150, 250, 300 type deal, or it's even closer to this, the valuation is less amazing. It's still pretty good. You're paying a decent revenue. Whatchamacallit, multiple for something that could potentially grow really quickly, right? But you have to assume that at least 2023 is a realistic revenue projection, right? Because right now you're paying 1.1 1.1 1.2 billion enterprise value between these two companies for 20 to 30 million dollars in revenue, right? So you're paying what, 35x current revenue? And that could be good if the growth rate is way more than 30%. But do you believe it? I think with Black Sky, I sort of buy this growth rate a bit more because there's near-term revenue that's already there, that's driving it. They have contracts in place, they have a big pipeline in place. Over here, it's like the only thing I saw so far was, hey, we're gonna get more salespeople out there, really develop more products, really target more companies, and that's good. But you know, is that actually going to play out? One thing that's good to see though is that really they didn't start getting any revenue, which is probably when they started launching their software as a service platforms here once they had enough satellites in space. The recurring quarterly revenue is clearly on an uptick, right? So there's clearly a need for this data. You're at 36 in quarter four. My question is this too low? Oh, this isn't by quarter, it's annual revenue. Okay, okay. That makes sense. So I thought this was $36 million in just in quarter four, but this is 6 million in quarter four, blah blah blah. So this is also sort of like, it makes you think that this is how much they're earning per quarter, but it's really additive annual recurring revenue. And they expect that to grow to 70 million by 2021, which I would think at this point they have pretty decent insight into what's going on in 2021. So if you just kind of say, hey, this is maybe after quarter one, the revenue is already in the 40s. They expect that growth to kind of continue. You could potentially reach 70. And if that's the case, they're basically doubling revenue in 1 year. That's pretty impressive. They kind of play out over here that, hey, how long did it take for us to go from 1 million to 100 million in annual recurring revenue? They're doing pretty well here. It took Shopify a while. Shopify's a great company that's priced very aggressively by the market, sort of behind Slack, but hey, they're in the Twilio now range. I don't really know any of these companies here that they're outlying, but hey, it is what it is. So they're certainly growing their recurring revenue pretty quickly. It's just whether or not that growth can continue. Um, Capital efficiency. Obviously, they spend a lot of money investing into some of the infrastructure that they have in place already. They don't think they're going to need to expand on that, and now they're sort of growing their software as a service business. So again, it comes back to the question: can they really expand and grow at the rate they plan to grow? Because if they can, this is a good business model. Gross margin is going to improve again as your capex goes down. Once your global infrastructure is in place, I'm sure they're going to have to do some additional launches, some fixes, what have you, but gross margin is going to explode. You're talking about 94% gross margin, because really all they're selling is they're collecting data once and they're selling it many times across a different variety of products. And if they can make that work, that's pretty darn impressive. Um, okay, so they're talking about, they're thinking they can sell their recurring revenue at a higher price every year, which sort of makes sense. As the data becomes more valuable, they can probably charge more for it. Total GAAP revenue up to 913 million in, so what am I looking at here? So that's 930 million in 2025, but over here they showed 1.189 million in annual recurring revenue. So what's the difference there? So this is the revenue that's recurring, but not necessarily potentially shown in or accrued in that calendar year. It's a bit confusing. Yeah, I guess I sort of makes sense. If your max annual recurring revenue is this, some of this is not going to be achieved until the end of 2024. It's going to flow into 2025. Some of this large number is not going to be achieved until 2026, so it's going to flow down into this number. So technically, this 913 is going to become well over 1 billion by 2026. I got it. And then free cash flow positive 2023. These guys were free cash flow positive by when on their 2024. It's an interesting comparison. Going back to the transaction, I like that they're getting cash. I love when these deals are essentially beneficial to the company and not beneficial to the shareholders. You've got 1.6 billion in cost in market cap at NAV, about 1.2 billion in enterprise value post cash, kind of slightly higher than this. But if you believe the projections, by 2025, this company is going to be doing a lot more in terms of revenue. By 2023, they're kind of in line. So this is cheaper on a equity value level, on an enterprise value to market after cash. Both companies are getting about 400 million in cash. Actually, the Spire is getting a bit more. If I look at NSH right now, it's not that far above NAV, so it's only 10% higher. So you're really looking at 1.4 enterprise value at this point. If I look at SFTW, it's about 24% higher. So really, you're looking at an enterprise value of, or at least 1 point, whoops, 2.7 something. So 1.8 billion in market cap. So enterprise value of about 1.4 billion. And let's just compare that against 2023 revenue, which is, kind of what you can best estimate at this point. I mean, who the hell knows what's going to happen in 2025? So it's a 6.5 enterprise value at today's, or enterprise value to revenue, revenue to enterprise value rather, at today's prices, maybe a bit lower. And then for NSH, 0.1631 times 1.1009. Minus 408. So enterprise value of 1369, and your 2023 revenue is what? Divided by 227, 6.0. So pretty close. They're not outrageously priced. Maybe this is a bit underpriced. It was like what, 6.3 versus 6.0 versus where Black Sky is at today's prices. But both companies offer a similar business model, right? It's just one of them's kind of focused more on the commercial space, which is Spire. Black Sky is more focused on the government defense space, which is potentially better, more predictable, I guess. They especially show that in their presentation. But I don't mind NSH as a company, and I think this is something I'll look into. I do like this space in general. There's a lot of movers within the space technology space. I use space twice in a row there. They kind of point out a few here: Astra, Momentous, AST, Galactic. But I kind of like this business model as something that could be a strong winner in this area. Because if you look at what's going on in the computer space, it's all about software as a service, right? It's all about how can we maximize gross margins. And the way to do that is to offer data, but also offer it on a repetitive scale. And these two companies have data. They're going to be able to get data. And if they can get enough people interested in that data and they can sell it, this is going to be a very profitable business. It's a question mark of if. The question mark is this possible, right? They're expecting growth of 100% between 2020 and 2025. Seems optimistic. If they can do it, this is a slam dunk at today's price, right? You're paying 1x 2025 revenues basically. Whereas with these guys, you're paying, maybe 2x 2025 revenues. It's still good. I mean, both are still amazing if they can execute. Anytime I see a high gross margin business, I'm interested. And I think I'm going to potentially start a position here, right? They kind of show, hey, what's our EV versus some of these other companies. And it's pretty good, assuming that their growth materializes. And clearly that's the huge question mark with SPACs. There's so many SPACs coming out. Some of them are seemingly amazing on paper because their growth rates are through the roof. Do I believe them all? No. Do I believe more than half of them? No. That's the interesting thing about looking at these presentations is it's kind of fun because it's like, wow, look at these pie in the sky numbers that they're kind of making up. But you still have to be realistic about the business model itself, even if the revenue numbers are pretty optimistic. And this seems like a pretty interesting business model, just like Black Sky was. And I kind of made the same comments on that video, and I'll link that in the description below. But it's an interesting business model. They have something that may not have been easily accessible to a lot of corporations and government agencies in the past. And I'm not just talking about corporations in the United States, but globally. especially with the threat of global warming and how this data can help with that, or it, help in any way with something like that. I think it's an interesting business model, and I kind of like it. I like repetitive, high margin revenue, and if these guys can execute even at 60 to 70% of what they're expecting here, this is going to be a good business to own for the long run. I'm probably going to start a position here just to have one alongside Black Sky. I probably prefer Black Sky a bit more, honestly, just because the business model seems to lend itself to contract-driven, long-term uh, pipelines that are more predictable than what they're doing here. But I think both companies are eventually going to converge in terms of what they're doing. They're eventually going to be competitors. And there's probably other companies that are going to be competitors. But what I like about Spire, in spite of that, is that they're ahead of the curve. They've got 100 plus sats up in space already. They have revenue, so does Black Sky, which is more than can be said for a good portion of the SPACs going public today at valuations that are much higher than this. I'd much rather take something that's already got 20 to 30 million in revenue, even if that revenue means I'm paying 30 to 40x today's revenues, if I think the business model is interesting, and if I think the potential to grow that revenue at a higher than 30x, 30% scale is there, then I'll take a shot at it. This isn't something I'd put a lot of money into because there's, who the hell knows? This company's been in place for years and they've only just started growing their revenue, right? So there's execution risk like whoa with all of these SPACs, and you have to be aware of that. But I think a small investment of my portfolio is pretty decent here, and I'll probably own this one, especially if it keeps going below where it is today. I think at $10, this seems like a decent deal. I think at $10, Black Sky seemed like a decent deal, pretty good deal even, both for both. Um, if they keep rising off of these lows, oops, and then SFTW, I think this was at like 14 or 15 when I made that last video. It kind of slunk down to the 11s, which is where I liked it again. I initially bought it in the sub 11 range, but I didn't mind it here. I didn't pick up any more, but both of these companies are interesting. Both of these companies are worth looking into, and I think the space is potentially attractive in the long run. There's not going to be It's not going to be an easy path. There's going to be growing pains, but that's the case with any new industry, and this is certainly a new industry that may be interesting, and I want to have a small piece of it. I'm not going to go all in with a lot of these things. I think it's hard to go on in on any SPAC, but these two are interesting, and I think Spire is pretty interesting. I'm not, it's not as sexy an industry as some of these rocket launch space plays that have gone up a bit more than some of these data analytics space plays, but I think this could potentially be a better business model in the long run as long as they can execute well, because the margins are impressive and it's not an unreasonable margin. You're selling data. You already have the data. You're selling it multiple times. Once you have that satellite constellation up in space, you're doing well, and Spire's already there. So it's interesting. It's worth looking into, and I sort of like it. Don't love it, but I sort of like it. Guys, that's it for today. If you want any specific analysis, let me know. If you think this video sucks, let me know. If you think it's good, let me know. I appreciate any comments. Again, I'm going to get a better mic eventually. As always, I'm not a professional financial advisor. Please do not take what you see here or hear here as gospel. Do not make any investments based on what I talked about today. Any risk, any investment comes with its own risks, and you should talk to a professional before you invest your own money. Other than that, guys, thanks for watching. Thanks for hanging out. And I hope you enjoyed the video. I'll be back with more of these and probably do them more often since it allows me to take a break from work and I can just babble on for an hour and somewhat fun. So thanks for watching, and I'll talk to you guys later.